Bond market did much better than sitting in cash over the course of this last sell-off, right? Because the problem is the money market fund, which we warned about last year, was at 5% a year ago. Now it's under 4%. So if you've been sitting in cash, your interest rate's been going down, down, down. Had you locked into a bond portfolio, not only did you get the higher interest rates on that money, but interest rates came down as the market sold off. So our bond prices actually went up, which is a huge hedge when you have a market sell off. I mean, put it in perspective, like how much was the S&P 500 down over the course of the last couple of days? Do you know what the percentage was?
We're recording this on a Tuesday, so through the end of Monday, the S&P was down about 14%.
Right. Our diversified portfolio was down like 2. And
Correct.
the
Correct.
reason being is not only do we have bonds, but also having other types of investments in your portfolio. And we preach this a lot because the other problem with this is every stock in this portfolio, they're all part of the same trade, right? They're all part of that high growth trade, somehow related to artificial intelligence, what we call growthier stocks. But meanwhile, on this sell-off, if you look at what was down the most, it was those stocks, whereas like international developed markets have held up better. If you look at value stocks, they've held up better here. Commodity prices held up better here. And again, if you had a huge bond portfolio to offset that risk, you really mitigated the downside in a big way. Like we had people calling us being like, oh my God, my hair's on fire. The market's down. But we're like, well, you're only down 1%. And they're like, really? But this is why diversification is so key. And even sitting in cash is not a great hedge when the market goes down. This is case in point.
Yeah, I mean, I guess the bright side is that, sitting in cash does give him the opportunity to get back into the market while the market's low. The wind is at his back right now. But, the hard part is taking action. I mean, how many times, over the last couple of days, Courtney, you and I called clients where we're saying, hey, here's our strategy. We're going to buy back into this thing and gotten so much resistance.
Absolutely, because everybody is very nervous that there's still going to be another leg down. And there could be, but if you have cash, this is a great time to get it to work. And my gut instinct when markets are down like this is to buy into it. But the problem is most of our clients are not very off balance right now, which is good. Like they're not down that much, which is where if you have cash, that's this perfect opportunity of let's start to get some money to work if it's sitting there.